Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, the Conference Board, and Corporate Board Member. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.
Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, the CEO of Boardroom Resources and the co-founder and editor-at-large of Corporate Board Member magazine. Once again, we are here at the Society for Corporate Governance, their annual conference here in Washington, D.C. It's a great collection of GCs and corporate secretaries who get together, cover relative issues both inside and outside of the boardroom. If you were with us for our part one of this series, we are with the Sustainability Accounting Standards Board Director of Research, David Post. Welcome back, David.
Thanks, TK.
So we used the first show to sort of set the foundation of what SASB, as it's called, is. Okay, so now we want to sort of get into what your vision is at the organization at SASB of sort of what is best practice, around this information. And then we'll talk about disclosure and maybe some other things. But let's start, first of all, in the vision of what, here you have a chance to sit with the board and say, here's sort of the best practice, here's how to use SASB. So what would you tell them?
Okay. So I think we would say that first is that their decision as to where they might report SASB standards is obviously completely up to them. So whether it's a 10K or an annual report or a sustainability report or a standalone report or other venues, that's an important decision for them to make based upon their own assessment of the different risks and opportunities about those different places to report. I would say regardless of where it is that a company would report this information, it's important to have governance around the reporting of that information. So for example, this organization called TCFD, the Task Force for Climate-Related Financial Disclosure, they came out about a year or so ago with some very strong governance practices for reporting, corporate reporting of climate-related data. And we actually adjusted the introduction to our standards to become much more consistent with the TCFD guidance on governance. So what we look for is when you're reporting financially material sustainability information, we would look for companies to talk about each one of the topics that they have identified as being material, and in terms of the governance at the board level and the management involvement of that governance, in terms of the strategy that they have for addressing those issues, to talk about the process with which they would include those sustainability issues in overall risk management, the extent to which they're going to be using metrics and targets to report on that information, and then finally it would be providing that data information in a 3-year basis, a trailing 3-year basis. So that's what we looked at as best practice.
So I assume you've seen all levels at this point of companies that have done it, and again, you had given some examples of that in the previous episode of companies that are reporting that. How about when you think of disclosure, when you guys first came out, I'm sure you had some original aspiration of what you wanted in the way of disclosure.
Right.
So you're smiling now, yeah. So I assume that
it's no coincidence that our name is SASB, because it's the Sustainability Accounting Standards Board, sort of modeled after the FASB, right, which the SEC points to all corporates and says, here's what FASB says about how you should report your financials, and all corporates do it, and so it's a regulatory requirement. And that was the original thought process behind SASB. To reporting financially material, very important distinction for us, financial material information in your regulatory filings. And what we found is we've gotten a lot of feedback from many companies that they have different perspectives on where this information should be reported, whether it is in the 10K or other locations. And it's really what we've really learned is it's a different evaluation process for each company, and it's really their own journey, and we are ecstatic that a company would report using our standards regardless of where it is that they choose to report.
At this point in time, there's no requirement other than some pressure by institutional investors that are supporters of yours, okay? So if a company was interested in sort of understanding this better or whatever, can they contact SASB and someone will either get on the phone or come visit them or whatever?
Right. Yes, I would say that our interest in communicating with companies is mostly from the standpoint of getting information and feedback on the standards, whether we have the right topics or the right metrics, should we be adding or deleting, how can we improve the quality of the standards. That said, any corporate that wants to call us and talk to us and have a briefing about our approach to standard setting, we would very much appreciate having those kinds of discussions, and we do have lots of those discussions.
I would assume that in theory, what you're aiming for is this to be a common practice among investors and companies, and sort of pushing that there does become some widely accepted standards that are created by you that are used, reported, disclosed, discussed, etc.
Right, and we, again, in the 7-year history of SASB, we're in a couple of months going to be coming out for the first time with a complete set of standards. So it's really the first time at the end of the summer that companies will really be able to look at a complete set, because we've gone through industry working group feedback and a 6-month consultation period speaking with investors and companies, 2 public comment periods for each industry standard, review of every single standard, every metric, every topic by an independent standard setting organization, and oversight by a foundation board that has 2 former SEC chairs and a former chair of the FASB that's making sure that we have good standards development processes. Yeah. So we think that they're not perfect and they will need to be improved. We plan to update them again in another 3 years, but they really reflect very strong processes and a view on our part that we're going to continue to improve them as time goes by.
So I understand the shareholder interest. I understand the company is. Are there other stakeholders outside of those 2 that I'm not thinking of?
Those are our 2 stakeholders. Okay. Every single topic in every industry standard must be financially material or likely to be financially material for the typical company in an industry. Yeah. We get feedback from other stakeholders, but the conversation always goes back to, is it financially material?
Yeah. Well, David, again, this has been a very educational 2-part series. I thank you for your time. And we're obviously curious, because this is, we're not even close to getting to the top of the bell curve here yet as far as...
A lot of empty space as far as the data that companies
Yes, there's a lot of growth that happened, but again, the investors and the shareholders are the ones that'll make this an important issue. And hopefully companies recognize it, but it seems like companies recognize what the investors push.
Yeah, and I think the interests really are aligned. I mean, both sides are really interested in financially material information.
Yeah. If you can convince them that it's financially material, that's one of the biggest challenges I think you have. But anyway, thanks for your time.
Thank you, TK.
And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week with another critical topic that'll help you be a better board member or committee member. So we'll see you then.
Join us again next week for Inside America's Boardrooms. Brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, the Conference Board, and Corporate Board Member. Along with content contributors, Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.